Every great campaign begins with something small, a quiet entry, a single trade, a humble idea that the market may be turning. But the difference between the novice and the professional is what happens after that first small win. Most traders cash out too soon. A few hold too long. Only the disciplined understand how to turn a small win into a great one. This is the method refined by Jesse Livermore, a process of probing, confirming, pyramiding, and protecting the trend until it has run its full course. The principle of turning small wins into big ones. Every major fortune on Wall Street started as a single successful test. Livermore never built empires overnight. He built them in layers. When the first trade showed profit, he didn't celebrate. He listened. That early gain was not a signal to exit. It was the market's invitation to continue. Small wins are not endings. They are confirmations. They whisper, "You've read the tape correctly, now act with discipline." That's the foundation of his entire philosophy. Build on strength, never on weakness. Jesse Livermore's complete pyramid strategy. The core of Livermore's approach was the pyramid, a structure that grows upward, never downward. He began with a light probe, a test order, small and safe. When the market rewarded that decision, he didn't double recklessly, he added proportionally. Each addition was smaller than the last, funded by profits from earlier entries. In this way, the position expanded as success confirmed it, never before. This discipline transformed risk into geometry, a base built on proof, a peak formed by patience. He called it buying strength, not chasing it. Because a stock making new highs isn't dangerous, it's alive. It tells you that demand is outpacing supply, that smart money is still entering quietly, while amateurs wait for pullbacks. He learned that cheap prices often hide expensive lessons, and true bargains are found in confirmation, not decline. The market rewards courage that's backed by discipline, not hope disguised as patience. The initial probe and market confirmation. Every campaign began with a probe, a small question to the market. Are conditions as they appear? If the tape answered yes, if the price moved cleanly, volume expanded, and reactions were shallow, then Livermore added. If the market hesitated or reversed, he stepped aside immediately. The probe wasn't about profit, it was about truth. And truth once confirmed was worth every dollar risked. The method of pyramiding a winning position. The structure of pyramiding follows logic, not greed. First, the probe. Second, the confirmation. Third, the measured build. Each new layer sits above profit already earned, so the capital at risk never exceeds the original stake. It's not averaging up blindly. It's rewarding correctness with controlled expansion. The difference between the amateur and the professional is that the amateur adds to losses, the professional adds to success. The defensive art of the progressive stop-loss. No pyramid stands without support. For Livermore, that support was the progressive stop-loss. As profits grew, stops moved upward, never downward. Each new level locked in gains, reducing exposure while allowing the trend to breathe. This technique turned defense into offense. It meant that every addition to the position came with greater safety than the one before it. He often said a stop-loss is not a sign of weakness. It's the trader's armor. And the one who refuses armor rarely survives the battle. Reinforcing success versus averaging loss. Here lies the great divide. The unsuccessful trader averages down, hoping that cheaper prices will save a bad decision. The professional adds only to what the market approves. Each addition is proof that the trend remains intact. Livermore believed the market itself funds the expansion. Profits create freedom, losses create chains. To reinforce success is wisdom. To average a loss is self-destruction in slow motion. Livermore's genius wasn't technical, it was emotional control. He accepted that the market is bigger than any man, that certainty is an illusion, and that humility pays better than pride. He treated each campaign as an experiment in discipline. The goal wasn't to be right, it was to trade correctly. When he lost, he learned. When he won, he built. And in both, he stayed the same. Calm, methodical, patient. Every successful campaign followed a pattern. Observation, waiting for alignment. The probe, a small calculated test. Confirmation, the market proves the thesis. Pyramiding, expansion built on strength. Defense, stops trailing progress, not hope. The exit, taken when the rhythm breaks. It was never random. It was a business plan in motion, a structure designed to convert insight into income without chaos. The folly of the Wall Street bargain hunter. Livermore warned that the most expensive stocks are often the ones that look cheap. He saw countless traders destroyed by the illusion of value, buying weakness, calling it opportunity. But value without confirmation is a mirage. Price may be low because demand has died. A falling market rarely offers bargains, only traps. The professional buys when the market proves worth, not when it merely advertises it. The true meaning of sitting tight. One of Livermore's most famous lessons was simple. It was never my thinking that made me money. It was my sitting. But sitting doesn't mean doing nothing. It means holding a winning position until the trend truly ends, not until boredom or fear demands action. He sat tight because he trusted his preparation, because his pyramid, his stops, his discipline did the heavy lifting for him. To sit tight is not laziness, it is mastery. It is the calm that follows a well-executed plan. The philosophy behind Livermore's growth method. At its core, this strategy is about trusting process over prediction. Small wins prove the thesis. Pyramids compound the proof. Stops preserve the capital. Patience completes the story. That's how small profits evolve into large victories, through the quiet repetition of disciplined behavior. So remember the structure that built legends. Start with a small, intelligent probe. Let the market confirm your idea. Add only as proof appears. Raise protection as you rise. And when momentum fades, step aside with dignity. This is not gambling. This is the architecture of professional speculation. Turning small wins into big ones is not about aggression, it's about control. It's about patience rewarded, discipline compounded, and confidence earned one layer at a time. If this philosophy speaks to you, if you want to understand how professionals transform small trades into lasting success, subscribe to Jesse Livermore Trading Insights. Each week we explore timeless principles of trading psychology, risk management, and the art of disciplined speculation. Because markets evolve but wisdom endures. Stay patient,